I don't want to be over dramatic. I've been doing this. I started MSA, Momentum Structural Analysis, in 1992. So it's 32 years. And before
Right.
that, I was in the future side of the business. Okay, now, I've never seen a setup of market potential dynamics and chaos that I see now. And we're already starting to see it evident in certain key core markets, not so much in the stock market yet. That's where I think the ambush could occur. And that's the one that impacts and hurts people the most if certain things happen that I can see via our sort of unique methodology, I can see setting up that would suddenly change the nature of the headlines. All that's part of the puzzle, but it's a lot of it is based on errors that have been compounded over the past, especially 15 years since the 2009 bear market low in the stock market.
Mhm.
When the Fed, actually before that, they took money to made it free. Okay, free money. Okay, the interest rates were effectively free for of the last 15 years. About 10 or 12 of those years, money was free. Okay.
Right.
Now, recently they jacked it up, and now they're taking it back down. But during that period of time, there was never in our history have we seen interest rates free. Okay.
Right.
Now, what does that do? Well, it's like sticking a needle in your hallucinogenic needle in your arm and getting high for, a dozen years. And you do things based on false core information. And one of the chief things that drive investors or companies that are building factories or adding employees or government spending or all kinds of things and individual families is the cost of money.
Right.
Okay. Now, if you're deluded into thinking it's free or going to stay near free, hey, forever. There were doubters back, 5 or so years into that process said, nah, they can't keep it this low this long. And they did.
Right.
Well, we argue that technically it created the biggest stock market bubble in U.S. history. That, we've had bubbles before, 23 to 29, the mid-2007 peak, which collapsed into 1970 peak, collapsed into 74, the dot-com peak, where we had the internet fever and then it finally collapsed. And then the 2007 peak that collapsed to 2009, it was largely mortgage-based,
Yeah.
This time it's broader and it's far, far bigger and older in terms of duration.
Yeah.
And therefore, if that's a bubble, as we argue it is, then it's been because it's bigger and older, a lot more errors have been created by families committing to a bigger house, companies, et cetera, all kinds of micro and macro errors. And when suddenly the needle gets pulled out, as they did for about a year here, they pulled the needle out.
Yeah.
Suddenly the errors start to be exposed and people, you start to puke. Okay, things start to happen. And you can't define each of them micro. Some are just family-based corporations, municipal government, et cetera. So it isn't just what's going on overseas. Yes, the BRIC nations are competing with the dollar. And they're doing a pretty good job because they're going to gold. Okay. Which is amazing because, who would expect countries like China and Russia to effectively begin to shift away from fiat currencies into a gold-backed currency? It's kind of a weird world. And the Western countries are totally fiat. They're not backed by anything but, hey, it's a good currency. No, it's not. It's a piece of paper that degrades constantly. So anyway, all these forces are at work, and they're impacting various market sectors. And for example, gold. Gold is the leader, and is our assessment. It turned up decisively back in March.
Right.
On the 2000 level, it's now 2,600. Et cetera. Silver shot up from like in the mid 20s up to 33 this week. So the monetary metals have started to advance, and the stock market is still inching higher. If you look at what's going on for the last few months, it keeps going higher, but at a more incremental rate, just enough to keep you happy, but not really exploding. The problem is that our analysis, which is entirely technical, not price-based, though we have our own unique methodology, and I'm not going to bore your listeners with our uniqueness. I will say this, I caught the crash in '87. It's what prompted me to start the firm because of a methodology that I was working on at the time. That same methodology now tells me we have that same potential this time around, particularly in the NASDAQ 100. Now, what does that matter? That's the leader index.
Okay.
That's where all your top stocks are, that all the names that everybody knows.
Right.
And well, the S&P went up like 8-fold since 2009 low. NASDAQ 100 went up 17, 18-fold. Okay, off the page.
Right.
You don't want it to break. And frankly, it's we've got some numbers that starting next quarter, which is to say Tuesday next week. Okay.
Right.
Okay.
Yeah.
You drop about 2% from where you are and you start to unravel the situation. You drop about 5% and it comes totally unraveled and could be in a rapid way. Well, this obviously will be an event that nobody's expecting right now. Not even stock market bears are saying, oh, we're going to fall apart. You know, they don't trust the market, but they don't necessarily think it's going to fall apart quickly. Wouldn't it be interesting in terms of political impact if prior to the election, the market got shin-kicked pretty badly, quickly? Because, you know, people have retirement accounts.
Exactly.
And, you know, and if all of a sudden, not only are the goods in the grocery store at an elevated level versus years ago, suddenly your retirement account drops 20, 30% rapidly. Now, nobody's talking about that. I see the potential.
Yeah.
Am I pounding the table that it must happen? No, but if you sneeze 2%, and especially about 5%, it's likely to happen. In which case you have a headline from hell that nobody is saying this could happen. And what would be the impact on the outcome?
Yeah.
I chuckle because it's always to promote the sense that everything is fine. And, you know, I can take you back to 1929 after we had the crash.
Yeah.
The crash occurred. There was a big rally, a 50% bounce into March of 1930. And President Hoover said, it's all over, it's great, everything's great again. Okay, that's when it turned around and for 2 years collapsed off the page. Okay.
Right.
Similar events happened back at the 2007-8 peak, the real estate peak. Bernanke would come out and make statements saying, yeah, the mortgage problem is totally manageable. Okay. She's made similar statements. You could almost put them on a board and they look like the same quote being repeated. And all I see are the technicals that tell me, this is not a bright situation. It's potentially quite dark, and it's possible that it could commence rapidly.
Yeah.
And that's the real political gut kick impact, you know.
Yeah.
You know, there's been talk, and I think even the New York Times had an article the other day. I don't read it, but I heard about it. It was sort of casting doubt on her press conferences and her inability to come across with real policy. Okay, so I think there's even doubt in that party right now that, oh my gosh, maybe we should have kept him instead of her. You know, it might have been bad, but this is even worse. Well, I mean, imagine if I'm right, and if the NASDAQ breaks 2% and then breaks 5%, and suddenly you have a headline event after that. What happens following that? Then suddenly all the cards throw by the air. Yeah. Okay. And I've been saying for over a year, and perhaps I said it when I spoke to you back in March, there is no outcome to this election that will be copacetic. Meaning, any election we've seen over, for the last 70, 80 years, it's always, oh, okay, well, we're going to compete with you in Congress, and we'll beat you in the next election. It's like, oh, okay, we'll take you on, but we'll do it in Congress. There's no outcome like that this time. Imagine if Trump wins. I've made the statement before that there'll have to be armored vehicles in front of the White House to protect it against the couple million people rioting in the streets, okay? If he's who they say he is, then, why should they be quiet if he gets elected, right?
Right.
If he's who they say he is.
They set up, right.
And if he loses, which is right now not looking like the outcome, it's more likely it's going to win, particularly if you get a market gut kick.
Right.
There's no outcome that's going to be normal. No. And that's not priced into various things, including the stock market.
Yeah.
When I say abnormal, I don't want to try to define it. University of Virginia back October a year ago did a poll, Department of Politics did a poll of likely Biden, likely Trump voters. And they asked very pregnant questions, including such questions as, if the other party wins, do you think violence is justified? It was a double-digit % of significance. It's, on both sides, it said yes. If the other side wins, is that the end of democracy? Big % on both sides. It didn't matter. It wasn't left or right in terms of that sort of view. Is secession justified? A little bit more on the Trump side than the Biden, but even the Biden folks said, yeah. So, I mean, there's no outcome to this election that is normal. Is that priced into everyday reality? Yeah, I even understand that liberal purchasers of guns have skyrocketed.
Yes.
Oh, that's, what a world. Okay.
Yeah.
Anyway, the outcome, we don't deal with that. What we try to do is help people with the markets as a vehicle to protect oneself. Okay, because if I'm right about the stock market, and if we wobble, and I think there's a good chance you wobble and therefore it gets pretty bad pretty quickly, you get hurt, you know, emotionally, physically, financially. So I'm trying to suggest ways that help people in that regard. The other thing is, what do I own? What should I own instead? If I'm out of this category, should I be in this? And we argue that gold and silver are a place to be, and we've been arguing that for some time now, not at well below current levels. And I think we're going a lot higher, because there's certain macroeconomic and political events out there that have yet to really show themselves.
Yes, true.
Even J.D. Vance the other day was interviewed on, anyway, I saw him in an interview, and he was talking about, even if they get elected, they got a big problem. And that's going to be the government debt crisis, because they're going to inherit that. And, you know, it's not going to have a good outcome. You know, who knows where U.S. government bonds might be, you know. It might be in a trash can in a couple of years. It's a lot of big fundamental realities are going to change, and they're going to impact people's financials. And so that's our primary focus, not taking sides. Although that's pretty implicit, but go ahead. You know, everybody said, oh, if we all just be unified. Well, let me ask you this question. Let's say everybody in Germany back during when Hitler took over, and he didn't take over, it was an electoral process that got him into office, you know. It was a legal process. What if everybody unified behind him? Was that good? Would that be good? So unity isn't always good.
Good point.
So unifying behind what we've had for decades now, a rising system of statism that controls more and more of your life as each year and election cycle goes by. Is that good to unify behind that? Or is it maybe good to let us sort of sit back and let it rip?
Yeah.
I'm not advocating. I'm not even active in the libertarian movement, which I was in the very early days was.
I know.
You could count us on 10 or 20 people, okay? I'm talking the early 70s. I'm not active, so I'm not speaking, you know, like from the Libertarian Party point of view, which I have many differences with. It's just that sometimes it's good to let things happen, because sometimes when things happen, it cleanses things.
Exactly. Yep.
You know.
True.
Okay. And so I think you sit back and you take care of yourself is the main thing right now.
Yeah.
So all I see is they are moving more toward a hard-backed currency. And even talking about it openly and discussing its likelihood is a revolutionary thing. I mean, because if our currencies start to collapse even at a greater rate than they have been. By the way, when I say collapse, what I mean is this. I don't mean dollar versus yen or dollar versus euro. It's all pieces of paper competing with each other. Okay, worthless, unbacked pieces. I'm talking about the buying power. And if you look at an M2 chart, money supply, and go back to the 1950s, every decade, the quantity of US dollars almost doubles. And in the last 10 years, it's more than doubled. So what does that mean? Well, it means when I was a kid, a loaf of bread was 20 cents. Okay, what do we have, a wheat drought right now? No, you have a decayed currency. Put yourself, or the other way around. Think about Social Security. Let's say 40 years ago you put money in, and then 30 years ago, and 20 and 10, and now you're getting the money back, and it's so degraded. It's like you're getting pennies on the dollar, and yet people think, oh, that's a good system. They degrade the money so drastically that even in a 10-year period, it's been cut in half.
Right.
So if you bought a stock at $10 10 years ago and it's 20 right now, you think you're making money? No, you're not in real terms. Well, you don't need why do you need an entity from above that has the power of government, meaning force? They have power of force, legal force.
Right.
To price and to create, one, to generate the quantity of the money unit, and two, the price level of it, meaning the interest rate.
Right.
Imagine if you had, the Soviet Union had this back before the late 80s when the Communist Party collapsed.
Right.
Where you would go down to a local store to get your loaf of bread, and it was one, the price was set by the government, and the government controlled the production. Or Chinese did it, after Mao Zedong.
Right.
And in the late 80s, they abandoned that. They privatized agriculture, where it used to be collective and run by the government. Right. And therefore, the price and quantity was set from above. Well, here we have an essential commodity in every human transaction. You want to buy a loaf of bread from a guy, you're giving him a piece of paper, he's giving you a loaf of bread, or just goods or services. And that money unit is controlled and priced by a central body of, quote, academicians who've never held a real job in their life, and they're telling you how much money they're going to create annually because they want to fund government programs, and therefore degrade the money unit as a monopoly force, by the way.
Right.
Price it as well arbitrarily, not let the market price the cost of money. So you have a totally socialist money unit, and yet it's the core commodity of all human transactions, and yet nobody realizes that?
No.
Once the error is exposed, and I think a stock market breakage of the type we're talking about, and it's not just going to be a crash event at some point, but something deeper and longer, people are going to say, hey, you know what? This hasn't been working.
Right.
We've had nothing but boom-bust cycles since the Fed was created 100 years ago, and they get bigger and bigger each time, and therefore the bust gets bigger and bigger.
Right.
It hasn't worked. And so, there could be easily, there are already, as you said, political forces that are saying, hey, we don't need this thing. Mm-hmm. Well, the other question you've got to ask is if that one side wins, that's going to start to dismantle and cut. And there are a lot of people behind Trump and in Congress and so forth that are already talking about what you're saying, abandon the Fed, let's get rid of it, and let's abolish this department, that department. The question I've got is this, and I don't want to imply anything.
Okay.
Again, I'm not taking sides. I'm an analyst from above, looking down at the situation. What is and I think there is such a thing as the deep state, meaning the institutionalized forces of government, not the ones that get elected every 2-4 years. What are they going to do when a force comes into play that wants to dismantle them, cut 30% of them, 50%? Are they just going to say, oh, okay, well, I guess I have to get a real job. I just don't know. What is the answer? What is the outcome? Again, this is one of the uncopacetic things. Right. I can't define it.
Yeah.
What's going to happen in that regard? What are they going to do? Part of the deep state. Okay.
Yeah. It just seems like a revolving door there with Goldman Sachs and BlackRock.
Yeah, it can change over the years, and obviously they've emerged. But ultimately, if there's an error, I try to make this point. A lot of people think government controls so many things, like markets. They think, they control the silver market. They control. All I can say is historically, yes, naturally, they do want to control certain trends and events.
Right.
That's why they cut rates to help keep the stock market up, or they, et cetera, et cetera. They manipulate things to try to control things. Well, back in the late 70s, when we had this stagflation, which shocked all the economists, they didn't think you could have both at once. Commodities exploded, gold exploded. The IMF was in there dumping gold in by the tons during 1979. And finally, they just gave up. The market ate them alive. In other words, despite the volume of gold sales. So there's a point at which markets take over. In other words, reality takes over.
Yes.
So despite the controls from above, if those controls are errors and reality finally takes over, then the error is exposed and the guy who committed the error is also exposed. He may go under, especially if there's not a government there to bail him out the next time.
Right.
So again, that's a threat, because if you do go into a major market decline again, we saw what happened in 2008 and 9.
Right.
They bailed out many firms.
Yep.
Of course, the state was organized, they were sympathetic with that concept.
Yeah.
They printed money, et cetera. Well, what if the guys in power this time are less inclined to do that?
Yeah.
So, it's panic city for the people who've made the institutional errors and are part of that process. So don't assume that they, quote, control things. Sometimes their control backfires and creates movement even more drastic in a way that they don't want it to go.
Right. Right.
That we should rebuild it. I think they're individual companies, they sell
Right.
products to individuals, and I think that the whole globe, if it were that way, would be ideal. In other words, forget about the boundaries. Let's have free trade. And if somebody makes a car that's efficient and it's less costly than ours, it's not like we're going to die in the process. Instead, we'll shift to another service or good. It's not like we'll disappear in terms of economic sustainability or viability.
Right.
If they do something better than we do, we'll do something else. Maybe we'll be data oriented.
Right.
Et cetera. There's agricultural countries, there's industrial countries. They all provide goods and services, and there's no need for us to be, top of each one of those heaps.
Right. It does appear that
my point is we don't need economic borders, is my view. Now, I know that that's not a popular view. Yeah, no, it's, that's one of the major functions of government is to, quote, defend. But all defense means always being somewhat on the hostile side.
Yeah.
Or looking for confrontation. It's one of the unfortunate aspects of large central governments is that massive war is associated with that. A major global economic upheaval right now might help clean some of that up, especially if the answer to that problem is less government.
Yes.
Look what happened down in, Argentina recently.
Right.
You had two political parties that basically back and forth for decades controlling Argentina, had hyperinflation. It used to be the 7th biggest economy in the world about 70, 80 years ago. Now it's, And so Javier Milei, who's stated to be an anarcho-capitalist, comes out of the blue, gets a large chunk of the youth vote, and starts to dismantle parts of the state. In particular, I even saw an article. It was on a .com site of one of the major publications, like Newsweek or something like that. I don't think it was in the print version, but they actually had an article that said he's actually helped solve the real estate crisis down there, in which low-income people couldn't find housing. It was priced off the page.
Right.
Because the government controlled the rental market with regulations and controls and so forth, and he dismantled that. And all of a sudden, those prices started to collapse, and so that low-income people could actually afford housing again, and it happened rapidly. And this is what I'm talking about, this type of upheaval where a guy who says, I don't really like government, period. No, I'm not going to get rid of it totally overnight, but I'm certainly going to start to hack it apart and remove sections of it. And when he did, look what happened.
Yes, exactly.
Imagine that happens here, there, and elsewhere, maybe here in some form or another. It's going to be an interesting few years ahead. Very interesting. We can't have misinformation.
Right.
We'll break your door down. I think that's even going on in Europe and the UK.
Yes.
You get bad and misinformation on your computer and we know about it. We're coming through your door. Well, lovely. This is all part of the ascent of statism to the point where it's always got an excuse, always got a reason.
Right.
And a lot of people now accept that reason because we certainly don't want misinformation, whatever that might be. It's whatever the government says it is,
Right.
This economic situation that I predefined here. If it occurs, that will help facilitate the rethinking of a lot of this stuff.
Right.
Because a lot of the institutions that help create this, what you're describing, will be in question.
Yeah.
But what we argue is you have a technical bubble, the biggest in U.S. stock market history. No bull market in U.S. history that later led to a major decline, 29, mid-70s, 2000, 2007. None of those major up moves were of the same dimension and duration as this one. Therefore, more errors have been compounded. So when it comes undone, it's going to be even worse. And that happens to be maybe fitting with these other things we're talking about that need to be dislocated.
Yeah.
Because if you dislocate that market and the blame goes to central government, and there's a lot of economists out there who are not, the Austrian school, who are starting to doubt the Fed.
Yes.
Even Fed friends are saying, you took it too high, too long. We're going to get a bust because of this. And so they doubt the veracity and the viability of a centralized bank. Now they're not exactly free market, but they're doubters.
Yes.
There's enough of that out there right now to where it could just be 52 card pickups soon with a couple of events helping spark that.
Right.
And there's a lot of events coming to coalesce here.
Yeah.
Well, anyway, in effect, that's a miniature secession, because what you're saying is, Fed, you don't control the money anymore because we've just legalized silver and gold as legal tender.
Right.
And it's not taxable. You buy and sell it, you don't get taxed. So in effect, that's a minor secession against the Federal Reserve's monopoly over money.
Right.
People don't see it that way, but in effect, that's what it is. And imagine it happened in all the states. Imagine if, all kinds of dominoes can topple here and cause all kinds of repercussions that we can only speculate about.
Right.
But a lot of them could be liberating. In fact, I don't even think the Trump people right now realize the potential that the market could benefit them so greatly before the election. These events, I like being independent from it. In other words, not involved in the political aspects of it, as just an observer. And I think that's where you stand too.
Yeah, I do.
I've never seen such dynamics at work. Not just the technical dynamics we see in the markets, gold market, the bond market, the stock market, but the real world implications of that and the events that are going on that we've been discussing, like the censorship move. I mean, who would have thought decades ago that government could do that and it not be called censorship? And yet it's not. It's so subtle. And it's going to be fun. And sometimes events don't unfold gradually. Sometimes errors compound over long periods of time, and when they come undone rapidly. The chaos theory. Instead of incremental trend break, it's the sudden washout.
Right.
Not just markets, but of concepts, institutions. And I think we're on the edge of that right now.
Yeah.
We're technicians, but we're not the normal technicians which look at price charts and draw lines on price charts. We'd have a different methodology, and we developed it decades ago. It's momentum based, but we analyze the structure of momentum. Meaning when you look at a price chart, people draw lines, that's structure, okay? Right. There's an uptrend line. Oh, that's a structure. Okay. We look at the same thing on momentum, but momentum often provides different structures than you see on price. Usually warns you ahead of time. The trend is going to develop. Okay. We look at all four major asset categories. It's foreign exchange, stock markets, not just our market, commodities, gold and silver with an emphasis there, and foreign exchange and the debt markets. Okay. Because they bang into each other.
Right.
You can't just look at the stock market and pay attention to the S&P. You can't just look at gold. So what we provide to the subscribers, we started as institutional only. It was in 2015 we opened up to retail.
Right.
Each individual investor is different. Some people have a long-term view, some are short-term, some can take risks, some can't. We provide research that they can apply themselves to their own unique situation.
Right.
Like if there's a major trend shift coming in a certain market, we say, we think there's a major trend shift coming, and this is where we think it's going to happen. If this happens, then the dominoes start to fall, or they start to explode. And so the subscriber can apply that to his own situation. And right now, our emphasis is on the monetary metals, and we've been on top of that very well for quite some time, and the potential for the stock market to really upset. Now, it depends on whether you're a leverage type of investor and have the risk tolerance for that, where
Right.
you use call options or futures. But we emphasize being long the monetary metals. Now, we're not, if you're getting long now, you're getting in a little late, but no, I think there's a lot of move on the upside. Gold's right now in the mid 2000s, 2,600. It wouldn't shock me if it went to 8 or 10,000.
Right. Yeah, that's what
And do so not over 3 years, but over maybe a year or so. Silver is, above 30 now. It just made new 13-year highs. I think it could easily go to a couple $100 an ounce.
Yeah.
No, not tomorrow, but over the next year or so, which is fairly rapid.
Yeah.
And on the other side of that equation is the degradation of money units, the perceived degradation of not just the dollar versus other currencies, but the value of underlying currencies is imploding because the central banks are printing and printing. And the stock market is a great risk to a lot of people who've no doubt been hummed to sleep with the happiness in the sense that, well, the Fed will just keep printing money and it'll keep going up. Well, they did that in 2000 to 2002 and the market collapsed. They did that in 2007 to 2009, the market collapsed. So don't be deluded. Well, we have a Twitter page, but the main thing is to go to the site and read about what we do and why we do what we do and why it's different. And you can request samples.
Excellent.
I'm happy to send them, and you'll get a sense of what do we do, how can you apply it.
Excellent.